Hello, future investors. Welcome to the show where we make boring things exciting. Today, we're diving into the basics of the stock market, perfect for beginners. Listen up because this is your chance to turn those hard-earned dollars into a mountain of cash. We're talking life-changing opportunities here, folks. So, buckle up, get ready to learn, and let's make some money. So, you want to be a player in the stock market, huh? First things first, you gotta know what you're dealing with. The stock market, my friends, is like a giant casino. But instead of betting on red or black, you're betting on companies. It's a collection of markets and exchanges where these companies list their shares. Think of it like a giant online auction house for businesses. You can buy a piece of these companies called stocks or shares, and if they do well, their value goes up, and bam, you make money. Of course, if they tank, well, you lose money. It's a roller coaster, but hey, that's where the excitement comes in, right? Now let's talk about how this whole thing works. Companies, especially new ones, need money to grow. They can get that money from you, the investor, through something called an IPO or initial public offering. It's like a coming out party for companies where they sell little pieces of themselves, the shares, to the public. You buy these shares hoping their value will skyrocket. Once a company is public, its stock starts trading on the market. It's a free-for-all. Buyers and sellers slug it out, trying to get the best price. It's all about supply and demand, folks. The more people want a stock, the higher the price goes. The less they want it, well, you get the picture. We talked about IPOs, but let's dig a little deeper. This is where it all begins, folks. A company decides to go public. They get all dressed up, hire a big shot investment bank, and file a bunch of paperwork. Then they put a price tag on their shares. Investors line up, waving their wallets, eager to get a piece of the action. If the IPO is hot, the stock price can soar on the first day. Remember those dot-com companies back in the 90s? Some of them doubled or even tripled in value on their first day of trading. Of course, not all IPOs are winners. Some of them, well, let's just say they go down faster than a hot air balloon with a hole in it. Listen up, because this is important. There are two main types of stocks, common and preferred. Common stock is like the general admission ticket to the company. You get to vote on stuff, and you get a piece of the profits if they have any. Preferred stock is more like a VIP ticket. You get priority when it comes to dividends, which are those lovely cash payments companies give out sometimes. But, and this is a big but, preferred stockholders usually don't get to vote. They're like silent partners. So, which one's right for you? That's up to you to decide. But remember, higher risk, higher reward. Now let's talk about indexes. These are like the market's mood rings. They tell you how the overall market is doing. The big kahuna is the Dow Jones Industrial Average, or the Dow, as we cool kids call it. It tracks 30 of the biggest companies in America. Then there's the S&P 500, which follows 500 large companies. And let's not forget about the NASDAQ Composite, the stomping ground for all those tech giants. These indexes give you a snapshot of the market's health. If they're up, the market is feeling bullish. If they're down, well, it's time to break out the Pepto-Bismol. Let's be real, folks. The stock market is not for the faint of heart. It's a wild ride with plenty of ups and downs, but that's what makes it so exciting. The biggest risk, of course, is losing money. Stocks can go down, and sometimes they go down a lot. But remember, with risk comes reward. The stock market has historically outperformed every other asset class in the long run. That means if you're patient and invest wisely, you have the potential to make a lot of money. Now that you understand the risks, let's talk about strategies. There are tons of different ways to invest in the stock market. You can be a long-term investor, like Warren Buffett, buying and holding stocks for years, even decades. Or you can be a day trader, jumping in and out of trades like a caffeinated squirrel, trying to make a quick buck. Then there's value investing, where you look for undervalued companies that are poised for a comeback. And let's not forget about growth investing, where you bet on companies that are growing faster than a weed in a fertilizer factory. The key is to find a strategy that suits your risk tolerance and stick with it. All right, rookies, listen up. Here are some tips to help you get started in the stock market. First and foremost, educate yourself. Read books, watch videos, and follow the market. Knowledge is power, folks. Second, start small. Don't go betting the farm on your first trade. Dip your toes in the water and get a feel for things. Third, diversify. Don't put all your eggs in one basket. Spread your investments around different industries and asset classes. Fourth, do your research. Don't just buy a stock because someone on Twitter told you to. Look into the company, their financials, and their future prospects. And lastly, stay informed. The market is constantly changing, so you need to stay up to date on the latest news and trends. We've talked about what to do, now let's talk about what not to do. Here are some common mistakes that beginners make. First, not doing their research. Don't be a sheeple. Second, emotional investing. Don't let your emotions get the best of you. Stick to your plan. Third, ignoring diversification. Remember those eggs? Don't put them all in one basket. Fourth, trying to time the market. Nobody, and I mean nobody, can predict what the market will do in the short term, so don't even try. Instead, focus on the long term and ride out the volatility. So there you have it, folks, the basics of the stock market. Now that you know the basics, you're better equipped to start your journey in stock trading. Remember, knowledge is power, so keep learning and stay informed. The stock market can be a wild ride, but it can also be incredibly rewarding. So, what are you waiting for? Get out there and make some money. Keep learning, stay informed, and happy investing.